Yeah, what is going on, guys? Today is technically Thursday, but these trades recap were for Wednesday, and I just wanted to jump on here to give a review of uh, fuck. Give a trade review on the trades that I've taken. Well, managed to take on the back testing sessions that we've done so far. Still learning and still trying to find new ways to make improvements on our trades, and I think I may have found something that kind of leans um, more towards the entry, as we find out like when we review our trades recently. um, I see that our break even is getting hit more, or we don't have room to take a trade, or like highs are getting broken or lows are getting tapped, so we're unable to go break even. So to even so to kind of help that, when the price makes new structure on the lower time frame, right? Let's say if we have a market structure shift into a high time frame POI, right? Our entry model forms, and we don't get a retracement into equilibrium, and price makes a new structure on the 5 minute. We should just wait until price hits equilibrium, see what the reaction is from there, and then take a trade. So that way, the range has done whatever it wanted to do, but also price comes and fills equilibrium where buyers or sellers are willing to get in, at a premium or discounted price to go long or short. So that way we're skipping all the structure bullshit on the lower time frame, and we're just genuinely taking a trade in POIs on the 5 minute, which are in discount or premium. So premium going short, discount going long. So yeah, that way we have clear targets and we have clear break even points. And it's something that I like, I'm trying to try out on my on the trades that we do from now on. Um, Not sure if it's gonna help or destroy our progress, but I'm willing to try it out to see, whether, price wants to come back or not. Like as you guys know, price normally comes back and fill equilibrium. Um, it's just a thing where buyers or sellers are not enough, and we need to collect more fucking more liquidity to push price a certain way, and price loves to do that within equilibrium, or like a PY within equilibrium or equilibrium itself. So that's why I've implemented a tool um, on our high time frame analysis, because that way, we're always picking, our probability goes up because we're picking the right POIs, right? So yeah, that's something that I've I'll show you guys on my second trade that I took. I didn't implement that on my first trade. I was kind of just seeing what the situation was. As on my first trade, I had to go break even very quickly. But it is um it is one of those things where you know um we're continuing to learn, and trying to do our best to kind of help us, right? Help us with our psychology, help us with our fucking um with our strategy, and making sure that we do win with these, within these markets, right? So with that said, we'll jump into the first trade. I think this was the first one. Well, I hope so. I think this was the first trade. Yes. So um okay, this was definitely not there. Oh yeah, I do think this was the first trade. Yes. Okay. So high time frame analysis. What do we have? Well, we can see on the 4 hour time frame, we have this obvious 4 hour Fair Valley gap here. Within this range, unfortunately, it wasn't within equilibrium. That's okay. Just means that price isn't ready to come and fill that area yet. Um, but what did we have on the 1 hour, right? On the 1 hour, we had a change in direction, which was indicated here as we broke this significant high here. And what was within equilibrium between these lows and these highs, this fair value gap, which was made on the way up, having that market structure shift. So, we low-key had our entry model on the 1 hour, but we waited for price to come back and fill equilibrium, which what was that equilibrium? This fair value gap here. So we can get rid of this because now our high time frame analysis and POIs have been met. Now we just need to find something on the lower time frame to align with that. So once we had this fill, we didn't have any clean sweeps. That's okay. No clean sweeps here, nothing here, nothing here. We did have this here. And we did have this market structure shift here. But unfortunately, this doesn't classify as displacement because we did not have a fair value gap, which was made. We did have this one here, but this was used to actually displace price higher, forming that market structure shift. So we can't really use that. So our range would technically be from these lows to these highs here, as but again, nothing within this range. I mean, yeah, there's not even a fair value gap here. Like if I have to zoom in to try to find a fair value gap, just it's just I'd rather not. I'd rather just wait for a clear fair value gap like this. But anyways, um, so pretty much just waiting for my entry model here, and we did get a tap of we did kind of fill a high time frame draw of the day, which was these on 1 hour highs, but there's always a chance where price could actually come and take out these 1 hour highs, which all the draws weren't taken out, but the draw that I wanted to target was taken out following, that tap from the 1 hour fair value gap here. But we did have our entry model. In fact, we had our entry model because we had a clean sweep here. We had a market structure shift at this high here. So we broke structure. We broke structure with displacement. What is displacement? We want a leg that breaks, has a shift in market structure, which is what we had here, and a leg that has at least one fair value gap in it, right? And that's what we classify as displacement. We had both. We had everything ticked off. We had our fucking liquidity sweep. We had our breaker structure. We had our retracement, right? And yeah, we had our retracement and we get a nice fill out of it. Following that, we weren't able to yeah, we make some moves up and yeah, price just fucking shoots us straight back down to break even. Completely okay. It is what it is. But um did we feel equilibrium? Yes, we did. Right. So now we know that this range has now completed its journey, or that if price were to step in, it would have definitely stepped in around this range here. Yeah, but yeah, unfortunately, it's one of those things where we couldn't get that displacement all the way um, up to these highs here. That would have made it a nice 2 hour trade. But again, it's one of those things where it kind of takes time, and um, we can't really get every single trade. We can't win every single day. Um, but But yeah, I mean, yeah, nothing much we could do here. All our entry model and conditions were kind of met already. So um, we kind of just take this trade under the chin. We go break even. Let's see if it would have played out as a win or not. Okay, so it would have resulted in a loss. Completely okay with that. Um, we saved ourselves a loss here, which is good. Just means that we weren't able to time it. And plus, trades could either go two ways. We either hit take profit or we hit stop loss. So for us to go break even, it was already a good sign, following that this trade wouldn't have played out or this trade idea wouldn't have played out. Um, but yeah, I mean, yeah, all conditions have been met, right? We had a clean sweep. We had our fucking market structure shift. We had our retracement into 5 minute equilibrium. What was within that equilibrium? We had our displacement, which is our fair value gap. Equilibrium was then drawn out from the low to the high, which that market structure shift happened. We had this fair value gap here as well as this order block. We had a reaction off this fair value gap following that we didn't get a closure, and we had a candle coming out of it. We enter. Break even was at the previous 5 minute highs. Following that, we get a displacement away from our break even to the point where price doesn't even come back in it anymore. Um, but yeah, price wasn't able to deliver, which is completely okay. It is what it is. What about the timing? 1 o'clock. So around about where New York was opening. So that could have contributed towards it. I'm not completely sure, but we all know that when a session opens, it loves to kind of manipulate some kind of low or high before continuing on its intended direction. But yeah, it is what it is, and we move on to the next one. So the next one was the second trade where I took, where I was talking to you guys before about how implementing that equilibrium, right? Waiting until equilibrium gets filled in general, right? Following that, we have our high time frame kind of following that we have our high time frame conditions kind of met. So um yeah, this was another break even, but as you guys can see, the trade actually plays out a little bit. So it would have been one of those trades where once we hit break even, I'm just gonna close my laptop and let the trade play out, whatever it does. But this was an absolutely clean setup. I'm not even gonna lie. This was like almost like if this was A plus, this would probably be it. I'm not gonna lie. But on the 4 hour time frame, what do we have? We have these swing lows up to these swing highs. No retracement, that's okay. We actually break 4 hour structure as well as 1 hour structure. So now the two time frames are alignment, the 4 hour and the 1 hour. Following, this range here, we draw equilibrium. Equilibrium gets filled on the 4 hour. Um, Unfortunately, the only PY we had on the 4 hour was this order block, but then gets refined to the 1 hour because the 4 hour and the 1 hour structure is currently the same, right? So we technically can use the 1 hour to act as our 4 hour. So our 1 hour would reflect the 4 hour. So if we're technically in a 1 hour fair value gap, um, that technically reflects off the 4 hour. So we should be getting 4 hour displacement as well. Um, but again, this fair value gap being within, this 4 hour fucking order block here, what I'm trying to say is that all like the time frames are alignment, right? The time frames are aligned right now. All time frames are bullish, right? We waited for price to actually come and fill equilibrium between this low and this high. What was within that? We had this 1 hour fair value gap here. We did have this order block down here, but price started to get really good fills around this fair value gap. Okay, so I can get rid of this now. So now our high time frame conditions have been met. What's next? We are waiting for what? We are waiting for a liquidity sweep or a clean sweep of some sort, displacement, shifting structure, right? Then we want a retracement into equilibrium, and then look to take a trade. So what I mean by this is that the 5 minute as you guys can see, we break structure, right? To the upside. But if I think about it, if we're in a 1 hour time frame, high time frame POI, right? And all time frames are bullish, technically this trade should end up playing out. But what I'm having trouble with is that when we do take our trades, our break even point is very, very short, right? I see that, like, the high that we have, right? Let's say if I take a trade here, if I take a trade on, let's say if I took a trade right here, um, if I took a trade right here, right? Stops would be below this low here, whatever. My only break even target would be these highs here, right? And what does that mean? It just means that, yeah, we take a trade here, but it doesn't give as much room for the trade to play out, right? And price will always break structure on the lower time frame. Like what I find is that the structure is always breaking on the lower time frame. But if I'm implementing the equilibrium on the 5 minute, so regardless of whether we break structure on the 5 minute or not, as long as we come and fill equilibrium following that our conditions have been met on the 5 minute, which is our liquidity sweep, our displacement, our market structure shift, following that, as long as we wait for equilibrium, we're able to take a trade, right? And that way, with this on this trade here, we took this trade and we had clear break even targets, was and was a certain, like, we had some distance, right? We made some distance away from our original entry point, right? To the point where that we're happy to go break even here. And if price wants to play out, it plays out. If it doesn't, then we have enough room for price to, kind of make a fucking play and then play out. Rather than like this, rather than um taking a trade here within the leg, and let's say this leg was within equilibrium, and then having to go break even here for price to just do this, right? That's what we don't want. So, yeah. So this wouldn't be in equilibrium, but let's say we have a break there. Oh, let me draw that better actually. So take back what I said about this being within equilibrium because it won't be. So let's say if we follow the same rules of structure on the lower time frame, right? We see that we react off our high time frame POI, which is this area here, right? Let's say this is the long POI on the 1 hour or the 4 hour. We get a nice reaction. We get our liquidity sweep down here. We get our displacement. Um, we break structure. Let's just say that we fucking break structure here. Price retraces a little bit, and then we break structure once again, right? So what we would do was implement the equilibrium tool on this range. But let's say we get a reaction here, right? And we get a tap back into this. Oh, let me draw it better. And we take a trade off this. Where's our break even? Our break even has to be here. Our break even has to be here. Has to be. And once we go break even, we don't have enough room for the fucking trade to play out. But if we're waiting on equilibrium from this range, right? And let's say, I'll just get rid of this so we don't get confused. Let's say price breaks structure and does whatever it wants up here, but it hasn't hit equilibrium, right? Let's say, yeah, like it hasn't hit equilibrium. So what this does when we implement the tool like this is the fact that let me just bring this up a little bit. But it implement. So let's say we have our we had our microstructure shift here. We left a bunch of fucking POIs here. Let's just say this is the Fifth Valley Gap, but let's just say this happens, right? So we're not taking the next breaker structure leg as our entry, right? So doing it this way, our 5 minute also reflects the 15 minute, because though we might have broke structure on the 5 minute, we could still be within this 15 minute leg. So regardless, if we're waiting for equilibrium to be hit and waiting for a POI down here to get hit, we're more likely for our trade to play out down in this area here because we'll be in a huge discount, right? We have clear break even targets, which is this high here, right? This high here. Clear break even targets, right? And room for our fucking trade to play out. So let's say we take a trade here at this fair value gap, right? We have a huge expansion, right? Which is this here. Price, after making a huge expansion, price could either get that 2R, right? Or we get a retracement, which is enough room. So by the time we break even already, the trade has all this fucking room to keep going long, right? All this room here. Rather than something like this where we have no room, we have something like this, right? We have something like this where price has all this fucking room to make a play. So whether we continue up higher or we're unable to get that 2R, price makes a high here and we end up getting stopped out, doesn't matter. But we go from having no room to having room. And this way, price reflects of the 15 minute as well. So now we're trying to align both time frames, the 5 minute and the 15 minute, following the 1 hour and the 4 hour, right? So though we have a fucking breaker structure here, price on the 15 minute could be doing this. So let's just say this break here is this. Or fucking, that wouldn't be that. It would be like, let's just say that, fuck. Let's just say that this micro break would be this on the 15 minute. And do we count this as a breaker structure? No, right? We don't, because it's only one candle form. So let's just say that this was one candle. We had one candle like this, and we decided to go back up again. Do we consider that a breaker structure? No, right? So, but when we implement the equilibrium tool, price, when it does this, when it makes its leg down, we're actually just retracing on the 15 minute to go long again. So it might look like this on the 5 minute, but it looks like this on the 15 minute. So that's why I like it's something. I'm not even gonna lie. I made this shit up. Like I made this shit up. Like, I'm not even lying. And this is just me fucking realizing that I have no room to fucking, after we go break even, we have no room for the trade to play out. We just get insta fucking stopped. But if we're just waiting for equilibrium to get hit, right? It can either hit early, which is what happened on that first trade, where if I just edit this, it can happen early. Let's just say this fair value gap is fucking here somewhere. It can happen early, which is okay, right? It just means that now our conditions have been met. We are now at equilibrium, so now the 15 minute can continue running that expansion, and we catch the early trend of it. Um, but this is more for trades that are not within equilibrium, but end up hitting equilibrium anyways, because price is just retracing on the 15-minute, right? So that way we're not capped to time frame. So that way we can align the 5-minute and the 15-minute. So regardless, we need equilibrium to be hit. That's what I'm trying to say. But yeah, I mean that kind of wraps it up for from what I'm trying to like implement. But as you guys can see, like here, right? We have exactly that. So we have our expansion. We then have our micro break of structure. So if you go on the 15-minute, this is what we have on the 15-minute. Pretty much nothing. No breaker structure, right? We wouldn't consider this a breaker structure. We would consider this a breaker structure, but definitely not this, right? But when we wait for equilibrium to get hit, right? We're more in a discount. We have untapped. We have liquidity draws, right? Which are these lows. We have unfilled fair value gaps. We have unfilled order blocks down here. And when we take a trade, we have targets that that we can go break even at. And once price hits that, we then have room, right? Price expands. And we have all this room before price hits us at break even. So it's more probable that price fills us and then continues higher, right? But unfortunately, it's just one of those trades where we go break even. We probably hit some resistance up here and probably chasing something a little bit higher time frame. But that doesn't really matter as long as we get our trade and we go break even, having room for the trade to play out. If the trade doesn't play out, it just means that price is chasing something else. But again, this is what we want. We want room for our trade to fucking breathe a little bit once we go break even, right? Which is exactly what we had here. We had once we go break even, price expands up. We have all this room to continue on the trend, right? But yeah, again, it's just one of those trades where unfortunately we did go break even. But you guys kind of get the point of what I'm trying to say. But yeah, I mean that kind of wraps it up for today's video. Um, I appreciate you guys so much for watching. Just want to say all glory to God as well. He's kept me on this journey, and he's been by my side every single day, keeping me going, as well as you guys as well. So I want to thank you guys so much for watching, and I'll see you guys in the next video. Take care.